Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's rises and fallers. The euro-dollar pair opened low but recovered during the week. The pair gained about 0.85% and was last traded at 145.50. The British pound had a somewhat mixed performance against the dollar, making a rise of 121% to close at 165.20. The US dollar was struggling against the Japanese yen throughout the week and the pair fell 1.54%. And the dollar CAD had a bad week and overall lost 0.63%. Commodities now. Gold had a decent week. By the close of Friday trading, the pair ended up moving up 1.23% and closing at $1,504.57 per ounce. Meanwhile, April crude orders had a mixed performance, surging 0.75% rise on Friday. The orders were last trading at $112 per barrel at close on Friday. In the news this week, Federal Reserve expects to raise the interest rates during the first quarter of the year, while the Central Bank of UK looked forward to an increase in the cost of borrowing. As per the summary of the 7th of April's meeting of the Bank of England, the policymakers voted 6-3 to maintain the benchmark rate at a record low of 0.5%, while still having concerns from the past month's data, which reflected a weaker economy. There was growth in the UK in government bonds. These pushed the 10-year gilt yield 4 basis points lower to 3.53%. The 2-year note yield is 2 basis points lower to 1.13% after it reached 1.12%, which is the lowest since January the 5th. In view of the economists, the economy of Britain has most likely seen some growth during the first quarter, with comparatively less pace than needed to reinstate the momentum of recovery. GDP increased 0.5% after contracting the same amount during the fourth quarter. The Office for National Statistics in London will publish the data at 9:30 a.m. on April the 27th. In the news from China now, 2 of the most well-known Chinese state researchers included 2 calls for the government to make use of the yuan in order to aid in curbing the rate of inflation that accelerated to a 32-month high in March. Ba Xiuxiong, who is the researcher at the State Council's Development Research Center, said that the reasonable pace in the yuan's appreciation could help China efficiently resist inflation. Ba strongly feels that there's room for China to increase the interest rates, and these will be limited if US, Japan and Europe continue to maintain low rates. Ba joined the growing number of Chinese officials and academics who have this month highlighted how the yuan may aid efforts to curb inflation that is threatening social stability. The Chinese central bank during this week said that the nation's foreign currency holdings, the world's biggest, rose by the second largest amount on record in the first quarter to exceed $3 trillion. In the news from Europe now, Jürgen Stark, an executive board member of the ECB, said that the sovereign debt reformation in the Eurozone state could cause a banking crisis worse than that unleashed by the crumbling of Lehman Brothers. In the comments released on the German broadcaster ZDF website, Stark increased the spectre of the US investment bank's famous fall down to highlight the European Central Bank's opposition to Greece reforming its mountain of debt. The rising expectations that Greece would restructure the debt load, which is 1.5 times its annual output, has elevated doubts whether leaders can restore the confidence in the 12-year-old euro currency experiment. Well, that's all we have time for today. We hope you enjoyed our weekly review and we hope you will join us next week. Until then, be sure to visit us at ufxmarkets.com for simple, safe, secure trading. You can also follow us on Twitter and Facebook. And if you'd like to submit questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@ufxbank.com. That's askthebroker@ufxbank.com. So from UFX Markets, I'm Martin Smith. Good luck and happy trading.